So I've done a lot of shorts during this entire month. So one of my very successful YouTube buddies told me to do this. So he told me take all the shorts and put them in one long video for your audience. Most of them have more value than the ones that gets views. So this is a massive amount of value I'm giving to you, and I hope you enjoy it, and I'm just making it easy for you to run through them one by one. So hope you enjoy it, good luck, and hope you have an amazing day. Bye.
So there's three edges in the market that not many people talk about. There's three edges in the market. There is edge number one. This is the famous circle or famous triangle of trading. There is the top, the model, the strategy. What are we looking for in the market, right? And we have the psychology part and we have the risk management part. If we take just one of those out, like if we have risk management and psychology, we don't know what we're looking for in the market, right? If we have a strategy and psychology, our risk management is not correct, so we're not able to make money from the market. And if we read personal help and personal development books on psychology and all these things, the trading in the zone books, right? Trading in the zone books. And we have our psychology correctly, but we don't know what we are risking or what we're looking for in the market, it's not going to work. So we need all these three to be able to make money in the long term in the market. It's not about getting like some profits one month and then we are losing the other month and then we are break even. It's about keeping trading for the long run. I'm going to do a breakdown of why I took this trade today, the reason behind it, and my mindset going through it. So here we go. So the first thing first, this is on NQ symbol, right? I go to the higher time frame before the market starts and I mark out the 8 o'clock and the 9 o'clock open on London session. So we're not doing anything yet, right? We are waiting before the market open for us to react. So what am I looking before market open? I'm looking at this structure. This is a this is a 1 hour time frame and I'm looking for the higher time frame to show me the structure and the trend of the day. So I'm seeing the break of structure to the upside, it's going up, and I'm also going down to the lower time frames now to the 50-minute, and I'm marking out the overnight range. There's a high and there's a low on the overnight range that happens every night. So before London session opens, there's an Asia session that opens. That is the overnight range. So I'm gonna do a bar replay right here, and I'm gonna just show you. I'm not taking a trade unless the 50-minute candle, first 50-minute candle that opens up needs to be over the overnight range. As soon as the first 50-minute candle closes over the overnight range, I'm taking the trade as soon as the candle closes. I'm taking a long. Why? Because my bias, the trend is bullish, my bias is bullish, and the first 50-minute candle is outside the range. It's confirmation that it's going bullish. So I'm taking this trade right here and I'm taking profit on these highs right here. This is basically how I took my trade today. Hope you learned something. And if you learned something, please, and you got some value out of this, please enter a number in the comment section below so more people would see this and it catches on the algorithm. This is the trade I took today, and I'm gonna just make it so simple for you to understand that I'm gonna write all the steps down. So step number one, what did I do? I checked if the 1 hour time frame had a break of structure. Let's do it like this. You can just screenshot this. Up, down, right? Bullish, bearish. Is this happening? So you can just check it off. You can just screenshot this when I'm done. So the first thing is first is the 1 hour, is there 1 hour break of structure happening to the upside or downside? The second part, the overnight range, is it marked out correctly? Meaning this is the overnight range. This is the 1 hour time frame. Is the 1 hour time frame created a break of structure to the upside or the downside? This is how you follow your trend. Okay, number three is the 50-minute candle, the first 50-minute candle after the market opens. If it's this is the London session. If it's the London session or the New York session, the first London session 50-minute candle, does it open over the overnight range? then I take a long. Over, if it's under, then take a long. That's basically it. That's how you do it. That's how I did it. That's how I took this trade today. So screenshot this and mark it as a checklist. And as soon as you want to enter and take a trade, just break those off. If those all are aligned, apply risk and take a trade. I hope you got some value out of this. If you did, please write me in comments in the comment section below or just write a number so it will boost the algorithm. Thank you. All right. First of all, the value of you is not connected to your account. Everybody blows account. It is fine. The thing is, and the trick is, like we put our self value on the account we have or on the money that we have. I'm speaking from experience. So if I lose a 100K account, if I blew a 100K account, like it's like we're feeling down because we did those things because we are connecting the 100K to our self-worth. It's fine. It's part of the game. It's it's the lessons you learn from them. Like this need to be documented that you did those things. Like blowing an account is part of the game. Like if you think about it, if you buy a funded account, I don't know, $800 or something like that for 100K or 200K, if you buy the account, if you get the account, the same risk you're risking on the account is the same price as the one funded account. So if you see it at the bigger picture, you will eventually get to making money consistently. So making money consistently will bring you back to remember when I blew the first account or when I blew the account. It's the part of the small steps to get to the bigger picture. As long as you learn from it, as long as you document and you journal what happened, there's those during those trading days, as long as you followed your system to the T, that's good. If you didn't, then you've learned something from that. Lesson in everything, in winning and in losing, especially in losing. Great question. Ask me more in the comments below. Whenever I get a winning trade, I always feel losing the next one and giving it back. I see where this is coming from. This is coming from a place where like we gain 5%, right? And then we take a trade and we lose it and we keep going up and down and we are stuck in that area. I see where it comes from. That area, like let me draw that for you. Like our equity curves is supposed to look like this. This looks so simple, right? But these areas are the areas where it's hardest for us traders to not overreact and not take it personally that we're losing these moments. But these moments needs to be as small as possible. But we still have to expose ourselves to the market. Like having the fear of losing the next trade or giving it all back, yeah, we're taking ourselves away from the opportunity. There's a book right here called Opportunity. If we make a 3 to 5% gain, we have more leverage to gain more opportunity. We also can lose those leverage, but we don't need to change our A plus setup metrics when we are in profit, when we are gaining 4 to 5%, right? And during those times, we we need to focus on not giving the money back to the market by risking too much. We need to risk less so we gain back our even keeledness, if that's a word. So we enter the market with trusting our system in the long run. Because if you have data on your system, on your model that you're using, you know that your equity curve is going to be like this. So fear losing the next trade and giving it back, it will not happen if you are correctly risking. Thank you for your question and ask them in the comments below. How did you teach yourself to wait for the perfect trade? I have three things that I did. The first thing is, do I have data written down about the strategy or the model I'm using? I'm using two models when I trade because the first one took too long to happen. Like it happened on Monday and maybe on Thursday. And it wasn't satisfying to me. So I taught myself to have some data to check when the time of the trade will happen. 2 times a week, maybe three times a week. And the second part is the market is always marketing to us. So when we enter a symbol and we see the market going up and down, bullish, bearish, it wants us to go in. But because we have data on what works for us, then I have nothing to fear because I know what I'm waiting for. The market can't lure me in. It's very tempting in the beginning. And number three, I'm willing to risk money on what I know. And let me be honest with you. You can do the perfect. You can be the perfect setup you take and still lose. Doing everything right doesn't mean that you're gonna make money, and doing everything wrong doesn't mean that you're gonna lose money. Everything right is the model that you're doing together with psychology and risk management. That is how you win. That is how I teach or taught myself to take the perfect trade in the long run. And now I just know when I sit next to the market in the morning before market opens, like I know this is gonna be a long day or this is gonna be a quick trade. Thank you for your question and keep asking the questions below. So we don't want to trade every day. When we come to the market and see price action looking like this is the time where we want to do something else or leave the market because we don't want to risk our money in bad market conditions. So this is one of the examples. Like if you look at this is market open, right? If you look at the structure before the market open, it's not clear. It's jumping up and down. It's consolidating. There is no break of structure on the higher time frames. I'm on the 1 hour time frame right now. There's no break of structure to the upside, right? There's no break of structure to the downside, right? Like we don't know where it's going. And during these times, the thing we want to do, the thing I do, is just leave the market, do something else, because the market conditions are not correct or not right for me to take a risky or a trade overall. Trading is overall risky. Don't let me forget to say that. But I want to trade when the market looks good. How can I stop myself from making trading mistakes I already know are wrong? This is a great question, and I discussed it with a friend of mine the other day. So I'm going to give you an example of eating unhealthy or sweets or sugar. So chocolate is one of my biggest addictions, right? I like chocolate, and I like them not being cold. So what did I do? Because there comes times when I'm feeling weak at the middle of the night that what I want to go and eat chocolate. So I took all the chocolate pieces and I put them in the freezer. When I get the craving for chocolate, I go to the freezer, I take them out, and I put them on the desk. I can't eat them because they are frozen. And it takes so long for me to eat them, so I just like I'm putting up walls for myself to not eat them because I can't trust myself in situation when I'm tired and my psychology, just like trading, is not correct. So I'm stopping myself by putting up walls because I've matured in in the areas where I eat chocolate. It's the same thing with trading. Like we mature the more we make the same mistakes. We're making the same mistake over and over again, and you tell yourself, you know what? I've seen this mistake before. I know what I need to do right now. We're mature and we're it's like we're growing up. We're becoming adults. We're not eating the chocolate. We're not making the mistake we know is wrong. Thank you for your question and keep asking them in the comments below. Let me break down the trade I just took on NQ. All right, you ready for it? So I'm gonna go from the beginning to the end. So I'm gonna just remove these, not this one. So if I go to the 1 hour time frame, the first thing I do is because this is the London session on the NQ symbol. So I mark out the 9 o'clock and the pre-market 8 o'clock open. So what do we see here before we enter the trade? I see that I'm bullish. I see a break of structure to the upside. I see that it's continuing bullish. It's making higher highs and higher lows, and it's continuing bullish. So I wait for the market to open at 9 o'clock. So what do I wait for? I'm going to do a replay here so you see what I'm looking at. So what am I waiting for? I'm waiting for the market to open at 9 o'clock. Before the market opens at 9 o'clock, I mark out the overnight range, the high of the low of the overnight range. This is the low of the overnight range, and this is the high of the overnight range. So as soon as the first 15-minute candle opens and closes, that's when I take a trade. As long as it's over the overnight range, it has to be over the range for me to enter. So the first 15-minute candle, let me just fast forward. The first 15-minute candle is over the overnight range, and what do? I enter on the close of the candle, and I put my stop loss underneath it. And I take my profits from these these highs, right? It didn't hit the entire move up to this high, but I took 2.8 risk reward on this trade. So I waited for it to move up, and it took out my take profit. That's basically it. That's how I made my trade today. Can I quit studying and give 100% to trading? This is coming from a person that's been in the market for so many years, and I've watched all the cycles. If you want to quit studying and give 100% to trading, trading is not a get rich quick thing. It's a get rich slow, and not even rich, like making a living out of it. It's a slow, long, strenuous process. You have to really put in the work. And if you don't have a couple of years under your belt, I will not recommend that you quit studying. You can do both. You can do, listen. I have a family, I have kids, I have bills, I have responsibilities. I've had a job before, right? And I did it in my job. And if I can do it, like a job like I really needed to work, if I can do it, you can do it. Like, how much do you need to study? Like, trading takes 2 hours, and maybe add some uh, add some 2 hours more for backtesting and reading and doing your journaling and all these things. Like, you don't need to watch 3 Netflix shows. Watch one and do the rest from trading. So if I can do it, you can do it. And I will not give you the do this and do that. I'm just giving you the opportunities to make you see that you can study and trade. Until you find success in trading, then you can might take off the years or quit studying if you like. Good luck. I wish you nothing but the best, and ask your comments in the question below. A tip to reach trading profitability a lot faster. Great question. This is a great question. If you if you really remove the need for money and you treat trading like a game, because it's somewhat it is a game. It's sport. If you treat it like a sport and not focusing on the money, it's focusing like a game, and you're leveling up, and you're leveling down, then you're leveling up, and then you're using these periods of pain as lessons. Because let me draw it out for you. Like, this is where you want to reach, right? You want to take this road because it's faster. There's a lot of spikes over here to the road of trading profitability. As soon as you can see those spikes as lessons that you're growing as a person, because when going from not profitable to profitable, is it's like you're thinking as your old self, as a different person, because you're not doing the same behaviors. You're more patient, you're more focused on routines and habits, you're more focused on processes. You're not focused on anything else that doesn't do with these things, because the process that you're doing every day will get you to profitability a lot faster. Thank you for your question, and ask me a comment and ask me a question in the comment section below. What is the best instruments to trade? I'm assuming you mean symbols. What symbols are best to trade? This question just shows me that you haven't done your back testing, you haven't you don't have enough data for you to know where your strategy is working the best for the long term. Like, is it on the NQ? Is it on ES? Is it on on the DAX? For me, I have been my symbols that I like to trade, and there's so many symbols, and I don't go to all of them because I want to narrow it down as 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 much as possible. So I don't want my mind to go and watch three, four different screens and three, four different symbols. I'm focused on two symbols daily. That is all. And that's worked for me for the long term. And I believe and like I'm not gonna change them anytime soon as long as it satisfies me. So the best instruments to trade is the ones that works best with your model and that satisfies you. The satisfaction level is important. You need to know what, because when you take a trade and you win and you want to keep on trading more and more, it's 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 telling me that you're not satisfied with your strategy or your profits that you're making because the instrument that you're using gives you too little. That's about it. I hope you have got some value from this. Ask me a question in comments below. What trading strategy absolutely doesn't work? I'm comparing this to to working out because there are so many strategies or models on how to work out, right? There you can go to a CrossFit, you can go to jiu-jitsu training, you can go to the gym, you can sprint, you can run long distance. It doesn't matter. They are all gonna give you a result of staying healthy, losing weight, losing body fat in the long run, as long as you stick with them. That's the thing. And people, like when I talk to other traders, we don't discuss each other's strategy. What works for you works for you. And what trading strategy, like ICT doesn't work, or a smart money concept, or the orb doesn't work. It doesn't matter. Is there somebody out there that it's working for? Yes. So everything works as long as you stick with them and apply correct risk management and psychology to it. It's not about the strategy. It's how your intentions. And don't get me wrong, there are strategies that are wrong. Like you're risking one to gain a half. Like I've seen, like it's not profitable. You're risking one to gain a half. Like at the end of the, you lose one, it means it takes away from two of your profits. So don't focus too much on the strategy. Just pick one thing that satisfies you and your time frame. If it's 1 minute or 15 minute or a swing trading, pick one that satisfies you and go with it for the long run and stop changing it because that's where we get wrong. And every strategy has a losing period. Every strategy has a losing period. It's up to you to stay even keeled during their losing period so you don't risk too much or blow too much money during those periods. When not to trade. We don't need to be trading all the time. This is what I've learned over the years because in my mind, in the beginning, I thought, you know what, I need to trade every day because I've seen so many people doing it every day. So these are the moments I'm going to show you some examples of market that is not looking good, the price action is not looking clear, and you don't want to trade on those days. All right. So this is one of the examples. Like you can see these if you just follow the line. Like it's going up, it's going down, it's going up, it's going down. There is no break of structure. There is no clear direction of where the market wants to go. This is the time where we leave the market. We go out, we take a walk. I don't know. We spend time with our family. We do anything else but trading. This is one of examples also. You can just save this and just keep looking at these things of how not to do it. Look at the market. There's no break of structure. There's not something obvious. The market doesn't look good. These are the moments where we don't want to trade. This is another example. Like it's like a piano pattern, you know? See? There's no clear direction of where the market wants to go. So during these days, we don't want to trade. We don't want to spend or risk our money in markets that are not certain. Good luck, and I wish you nothing but the best. Have an amazing day. This is the famous triangle of trading. If you don't know this, you will not be able to make money. You will be stuck in the same vicious cycle over and over and over again. I'm going to break it down for you in a simple way in this short video. So this triangle of trading, you need to have an edge. You hear that a lot. People talking about your edge. You need to have an edge where you focus on what you're looking at. We need to have an edge, so we need to know what the market is giving us. We need to know what we're looking for. That's number one. Number two, we need to have a psychology correctly. Our psychology, our mindset behind trading. How do we feel entering a trade? Did I not drink a cup of coffee to make me energized and more focused before sitting next to the market and taking a trade? Am I did I just have a fight with my spouse and I'm now taking out my aggression on the market because I want to, I don't know, hurt something and take something from the market? That's psychology. And last but not least is risk management. How do I risk? Am I risking too much? Am I risking too little? How is the balance between the trades I'm taking and the risk I'm risking in the market? These all three things need to be aligned for you to trade. We can't just have a model or a strategy that we follow, and we can't just read books and have people like trading in the zone, reading books like that, and think our psychology is automatically gonna be better, and we can't just apply risk management to a strategy that doesn't work. So we need to have all these three for it to work and to be able to succeed in the long term in trading. Is your environment important for your trading success? This question takes me back to where I was working and trading at the same time. So the environment I was in, eventually I got my own office and I closed the door and I even bought like screen protectors, the black ones that people can't see what I'm doing. So I used to trade at work all the time, but still people will they don't even knock. They knock and then they go into the office. And then it affected my trading. So what did I do? I put a note inside my office door looking out saying, please knock before you enter, or please do not disturb, because disturbing in the moment will affect my trading. I will become more stressful, so I take bad decisions. Like someone walking in, like I'm in profit, I close the trade because there was something outside of trading that affected it. So I want to eliminate all these things. I want to eliminate what I can do to create an environment that is successful. So putting a note made people knock on the door and me to relax and then open the door and answer what they wanted. So when I first started trading, there are so many symbols you can choose from. Let me show you. Like if you just write, there are so many. And in the beginning, it feels so overwhelming. I get it, but you don't. That's a belief of statement of belief. I trade two symbols. Let me show you what I trade. I trade NQ, Nasdaq from the US market, and I trade the DAX. It's called the DAX. This right here. It's DE40 or GER40. That's it. I only trade these two, and I trade them between 9 o'clock in the morning and 11 o'clock. Sometimes the trade I take is 1 hour, 1.5 hour. Sometimes it's 8 minutes. But I'm only focused on these two, and I'm not reading any news. I don't care about what's happening in the world. I'm just focused on reading the charts, following the technical analysis that I did for my model, and I'm making the highest, best decision in my day during these time. That will bring me a lot of money back. That's what I'm focused on. So we have these misconceptions about trading that's going to be huge. You don't need to make it simple for you. Make it work for you.